Hello and welcome to Inside Infrastructure, an inside look at the decisions and decision makers behind Australia's city-shaping infrastructure. I'm Adrian Dwyer, Chief Executive of Infrastructure Partnerships Australia, and I'll be joined later in the show by my co-host Ilya from our series sponsor PwC Australia. Prior to the onset of COVID-19, Ilya and I sat down with John Pickhaver, Co-Head of Macquarie Capital Australia and New Zealand. Despite being recorded before COVID-19 emerged as a defining issue of our time, the themes we discussed are arguably even more relevant in the shadow of the crisis. With areas like resilience, digitisation, renewables, decarbonisation and infrastructure funding all part of our discussion, we also somewhat prophetically spoke about what an infrastructure stimulus might look like if it was needed. It was a great chat, so here it is. John Pickhaver, welcome to Inside Infrastructure.
Thanks for having me.
So you're an investment banker would be how you'd self-describe? Or?
Yeah, yes, that's right. So engineer by background and then moved into infrastructure finance and now looking after Macquarie Capital across Australia and New Zealand, which is the capital markets facing project finance, corporate advisory, principal investing part of Macquarie. So merchant bank style, investment bank style. We don't use that phrase in the sense that we're not a regulated bank. We've got a bank at Macquarie that does home loans and those sorts of things. So we're the Macquarie Capital part of the business. But yes, it's a bit of an unusual background for investment bankers, as it were, in terms of where I've come from.
Can we talk through that? The engineering background. So, because we understand you've got a PhD in, is it civil engineering?
Civil engineering, yes, guilty.
And
yes.
I've seen a paper with some oil drums on it, or some kind of very exciting.
You've seen that, yeah. That was the undergraduate one. So yeah, look, I started as a civil engineer and enjoyed that, and that was the choice for me. Really enjoyed the numerical side of things at school and problem solving, and that seemed to come together for me in civil engineering.
You wanted to be an engineer as a kid?
I wanted to be an engineer. I wanted to be a pilot as a kid, an airline pilot. My dad was a pilot. My uncle was a pilot. My other uncle was a pilot. My grandpa was a pilot. Wow. I am the black sheep of the family. I don't have my pilot's wings. And so actually one of the things that I thought about when I was choosing to go to university was becoming a pilot. And just at that time, my dad threw himself into a rubbish tip of all things, broke his back, and was okay, but couldn't fly. He was fine walking around. He could swim. He could walk. The one thing he couldn't do was sit. Wow. And international airline pilots spend a lot of time sitting. So he had a whole pile of time off. And he said, look, if you want to be a pilot, that's okay, but why don't you go and study something first in case you do something like me?
Plus, you've already got the standby flights from all the rest of the family anyway.
That was good fun as a kid, that's for sure. That's for sure. But Dad, he flew for Qantas for 42 years. He came straight out of school, went into flying. That was all he knew. So he didn't have a backup, as it were. So his advice was go and do something that you might like to do in case you didn't want to do.
So even at university, though, it was still be a pilot, but
I'd sort of thought about it. I'd thought about it. By the time I started engineering, I loved it though. So by the time I was into it in year one, and it became apparent what civil engineering really was and the doors that it opened, then that was really it. So I continued on that track and did civil engineering here in Australia at Sydney University, and then worked as a design engineer for a number of years for Hyder Consulting, which is now Arcadis. And got to work on large civil infrastructure projects. So the big projects around here at the time were Parramatta Chatswood Rail, as it was called before it was just Epping to Chatswood. M5 East design as well was happening in construction at the time. So the big tunnelling type projects. And that really got me interested in the financial and commercial side of infrastructure. So we're involved in PPP bids. You'd see the lawyers and the financiers and government in the bid room and so forth. And the collaborative nature of those huge infrastructure projects was what really got me heading down a track of infrastructure finance as something I wanted to do. But then I took a sort of a side turn, as you say, on the PhD side of things, and ended up going and doing a postgrad degree, a doctorate in engineering. Having decided I wanted to do infrastructure finance, an opportunity came up to do the postgrad research.
And that was after you'd already been working at Hyder?
It was, yeah. So I was at Hyder for a number of years, and then this opportunity came up to go to the UK to do the research. I was at Oxford, so they call it a DPhil there. They shorten it in a different way. But postgrad research, doctorate in engineering in tunnelling, and particularly looking at modelling of buildings when you're constructing tunnels underneath them. And I was using the Jubilee line in London when they built that in the late 90s. They instrumented a lot of the buildings that the tunnel went underneath, so they could measure how the buildings reacted. And they thought they would probably be spending a whole pile too much money protecting those buildings, soft ground, old heritage buildings, and they did. So the research was about how do we predict the damage better to buildings.
Okay. So what did you find?
So I built a big computer model of building, soil, tunnel interaction, a big finite element model, so geotechnical engineering model in the ground, progressive excavation of tunnel, and then the new thing, because all PhDs have to have something new, was a way of modelling the building just as a series of beams on the ground, so I didn't have to model the whole building. And then you could model it, predict the damage, and the nice thing was with all this Jubilee line data that we could compare these predictions from the model to the actual data.
So had they used your model on the Jubilee line, what would have been the difference?
They would have saved money. They would have saved money because they pumped all this grout in underneath the buildings, above the tunnel, beneath the building to protect the buildings in the soft ground. And they, in hindsight, spent too much on the
they were like
on the money.
Like seismic monitors and.
They had, so displacement monitors on all the buildings and photographic images and so forth, so you could tell where all the buildings moved as the soil displaced as you excavated the tunnel.
Best not try to get into the weeds of stuff, Adrian. You and I will be found out pretty quickly.
But I'm just, so you're a real engineer then. This is like, often in investment banking, but other places, there are lots of people who are engineers because they did it for the maths and then they
moved on and did other things.
So they never practiced as an engineer. Yeah. But
I did. Yeah, I was an engineer for 6-7 years before moving then to Macquarie because I'd done that postgrad study in the UK and I joined Macquarie in London. So then I finally did head down the infrastructure finance track and join Macquarie in London. But yeah, did work as an engineer for those years. Doing a PhD in engineering like that's kind of like working in an engineering consulting office. Yeah. It's a big open plan office. You got all the students. You're all working on your own project as opposed to collaborating. So it's a collegiate environment, but you've got your own individual project. So it feels like you're in a consulting engineering office. Others who are doing testing, sand testing or soil testing and rock testing and other things had the lab. I didn't get to crush rocks or anything, which was a bit less fun, computer modelling.
After all of that time at Hyder and then the PhD and all the dreams of being an engineer, I know you already had your interest in infrastructure finance. Then you eventually made the jump to back to Macquarie. What was happening there? Was that always the plan to get to Macquarie straight after the PhD?
It was. In fact, it probably was the plan before the PhD. I was heading down that track of wanting to go into infrastructure finance while I was working on those PPPs for Hyder, and the place to do infrastructure finance at the time here was Macquarie. That was the place to do it. So I wanted to do that, and really the PhD was a detour or treading water really in that career for 3.5 years while I went and did that. And by that stage, Macquarie was pretty big in the UK. No one really still knew who Macquarie was. They couldn't pronounce the name, didn't really know what we did. But the office was big enough, a couple of hundred people there. And so I decided we'd stay in the UK. And my wife, Joanne, was in the UK at the time. I met her doing engineering at Sydney Uni, actually, and she moved
When was that, by the way, that you finished?
Joined Macquarie in 2005. Okay. So I was in the UK 2001 through 2005. Right. And that, so pre-financial crisis and all that sort of stuff. So lots happening.
But post M6 motorway? Because Macquarie had
post
that in the UK?
It was around about the same time.
Yeah.
I was there at the time when Macquarie had just bought their first asset in the UK, which was a water company in the south of England. They'd just bought Arlander Express, the railway that went out to the airport.
Right.
And that was in our Macquarie European Infrastructure Fund number 1. So Macquarie Capital, which was called the investment banking group at the time, was the advisory group. We had the funds management group, and they just bought their first asset. They're now up to Macquarie European Infrastructure Fund number 6.
Right.
So the growth in that space, which we'll talk about as we go, has happened in that space of time. So it was just sort of at the beginning of Macquarie getting into the infrastructure side of things in the UK.
What were you doing there then at the start?
Utilities advisory, actually. So I joined what was the utilities advisory team in the investment banking group, which was advising on the acquisition of things like regulated water, gas, electricity. And the UK at that time was just going through a process of privatising all of their utility assets. It was the first cycle of privatise and then regulate under the new regimes. So it was early days for that. There was a lot of activity because there was a lot of small water-only companies and mergers happening and private capital for the first time coming into the UK utility sector. And so a lot of first transactions were happening at the time. And
it was Australians bought up half the water sector during that period, didn't they? Australian funds.
Not sure it quite got to half, but there was a lot of talk about that. I guess the one that got the most press was when a consortium that Macquarie led bought Thames Water.
Yeah.
So that's the water utility around London, high profile, large transaction, and that consortium owned Thames for a number of years. One of the interesting things I think about that is that as that private capital came in and the regulatory settings were set up for that, there was a real incentive to invest further capital in those businesses and make them more efficient. So the whole regulatory regime was around making those companies more efficient. They'd measure efficiency benchmarks, measure the companies against each other. And that's actually what happened. It was a good example of a regulatory regime encouraging that capital to come in. The performance of the companies improved. In water, it was things like leakage and service repair times, and all of those metrics got better, encouraged by that regulatory regime. They needed the money to come in. They'd all been starved of capital.
Just as an aside, I find it interesting that so Macquarie is no longer involved in Thames.
Not anymore, no.
No longer involved in Sydney Airport, which was previous owned.
No.
There seems to
Not
be
everyone knows that, by the way. A lot of
don't-
taxi drivers still think we own it, which we don't.
I don't get that impression with any other owners of infrastructure assets.
No, it's interesting, isn't it? I think there's a common knowledge about Macquarie's interest and expertise in infrastructure and ownership. We do remain the world's largest owner of infrastructure assets. So that flavour of acting as an owner, and particularly in our funds business, still persists. But things like Sydney Airport we owned for a while. It's now listed on the ASX. Anyone can go and buy a share in SYD. So there's this recycling, I think, also of capital that comes as part of what we do. And in the Macquarie world, you've got two parts to it. Largely, you've got the funds management business that owns assets and looks after them as custodian for a long period of time. They manage money that is people's superannuation, pension money on behalf of those savers, and that goes into those assets. Or on our side, we're advisors to transactions or developers of assets, so it's much more shorter term investment horizon on our side of things. We get to operate in both those spaces, which is quite nice, actually.
One of the things that's quite different to when you would have first been at Macquarie is just the scale of the superannuation savings that Australia has. And I think a dynamic, even over the last couple of years, is those organisations, Aussie Super, First State Super, others, scaling up their infrastructure teams and doing much more direct investments, buying whole assets or very big chunks of assets. And one presumes that extends over time to maybe even delisting companies, that kind of stuff.
We've seen that. We've seen that already.
Does that change the way you go about your job?
No, it doesn't. It doesn't change it. It means we're busier because there's actually a lot more investors who like the asset class. The asset class has matured, those real assets, infrastructure and property. So there's more people who want exposure to that. That happened initially by those people saying, we don't have the expertise, we like the nature of these, so we'll find a fund manager who can do that for us. That's where Macquarie Funds set up. That's where the likes of a lot of the other infrastructure fund managers have grown up. And now, as you say, those investors are getting their own teams to be able to do that directly. There's two things driving that. One is they want their own sort of look after their own destiny a bit more and do it themselves. That if they've got the skill set, they don't need to pay a manager to do that. Excuse me. So that is part of the development of that. What it means for us is there's a much wider range of people who are looking to invest into these assets. And so what's happened there is you've seen the definition of infrastructure and the types of assets that are considered infrastructure or infrastructure-like or quasi-infrastructure, whichever definition you might use, expand. So it's gone now beyond regulated utilities. It's gone into things like data centres where there's long-term contracts or contracted energy assets. The social infrastructure side of things. So hospitals, schools, waste to energy, land titles offices, other heavy physical infrastructure assets is where it started. And now where you think of assets where there is a certainty of revenue or certainty of cash flow, they may not have that asset backing. Things like land titles offices are a good
So you need to redefine what infrastructure is?
I think the boundaries of what infrastructure is when you think about it in a physical sense are what we'd all know. But when you think about it in a financial and a commercial sense, it expands. I actually think the better way to think about it is in a community and a social sense. So if in that sense infrastructure is anything that allows you to be performing your function, moving from place to place, connecting to the internet, doing, getting provided services, anything that facilitates that, whether that's a physical thing like a road or a digital thing like digital storage or a battery in your car, anything like that that's helping you provide those services, that for us really is the infrastructure that society needs.
So you say us. It's interesting because we mentioned before you're the co-head of Macquarie Capital. I don't think we've seen that in other, or certainly I'm not aware of it in any other similar businesses. How does that work for you guys?
It works really well. So my co-head, my partner is Tim Joyce. His background is as a lawyer, and he grew up through our business more on the listed market, M&A, equity capital market side of the business. So he's an industrials banker, as it were. So advising clients in listed market M&A was his upbringing. So he's more on the listed market side of things. I've come up through more the private side, that is government, private capital, infrastructure projects and the project side of the business. And because Macquarie Capital does both, having us both co-heading the business provides us a really great flexibility. We're quite complementary in the skills that we bring. We perform the role in a joint fashion, so where either of us can do anything that our role requires in the business, but there's a natural focus in those areas of background that we've got. So it works really well. We've got such a breadth of business across Macquarie Capital that it allows us to lead the business together.
Are there other parts of Macquarie that have a similar co-head approach?
There are. In fact, most recently, the global Macquarie Capital business now has co-heads. Tim Bishop, who ran Macquarie Capital globally, retired last year, and we've now got two global co-heads. Michael Silverton, who runs what's the capital markets side of it, so the advisory and capital solutions business. Dan Wong runs the infrastructure and energy group, which is the other half of Macquarie Capital, as co-heads of our Macquarie Capital business. And they've done that largely to focus on those two areas. In Australia, because the market here is so well developed and we're quite large in the market, all of our activities are pretty much intertwined. In other markets globally that Macquarie operates in, for example, in Asia, we don't do a lot of advisory work, but we do a lot of project and energy and infrastructure development work. So our IEG part of the business is very dominant of the things that we do in that part of the world. In America, it's a much more advisory and a capital driven business. We do a lot of debt underwriting. We help a lot of private investors, financial sponsors, do private equity type transactions and finance those. So we've got these different natures of our business all around the world. In Australia, we've got all of them all together. And as we've grown overseas, and Macquarie is now actually 2/3 of our earnings as a group, Macquarie Capital included, is overseas. So we are an Australian company and we're big and busy in the Australian market, but 2/3 now of our earnings are overseas.
But so there's a meeting with your team, you say one thing, your partner
We
says
very
another.
rarely say a different thing, and if we do, it'll be between the two of us. So,
So it's like parents.
work it out
Don't
behind
argue.
the scenes and then have
Yeah, don't
a
argue in front of the
consistent view.
kids.
Yeah, no, that's right. But the nice thing about it is Tim and I are actually very complementary. We think about things in the same way. We've got the same culture, or we want the team to operate in the same sort of way. The things that we disagree about are sort of food selection over lunch or something like that. It's very rare that we're disagreeing about things, which is good.
And that never reaches a blow-up style of disagreement if it's just about the lunch.
No, I think our staff are waiting for that to happen. It hasn't happened.
Wow.
So
I wonder though, is there something about culturally about Macquarie that makes that work? Because the traditional instinctive view is that you have those internal tensions of leadership are encapsulated in one individual at the head of a business unit. There's accountability from that person to their boss.
Yeah.
But yet on a couple of instances in really key positions in your business, you've
got two.
split that. I just wonder, is there something about your organisation and the culture that's allowed that to be successful?
Look, I'd say there is. And then you'll say, well, what is that? I'd probably put it down to the collaborative nature of what we do. So when you think of the senior leadership across Macquarie, whether you're leading a business, you're leading an industry group, you're leading a product or anything like that, leading a region as Tim and I are, there's a collaborative nature of the things that we do that means all of the senior, all of the junior, everyone needs to get on and head in the same sort of direction, so that the competition between two people or two industry groups or two different things isn't additive to the things that we can do or the things that we can provide for our clients or investment partners. So fundamentally, everyone needs to be heading in the same direction. So that's part of it. But the other part of it is that we've all been working together for such a long time. Macquarie is a place that has amazing longevity. The average tenure of our executive directors, that is the senior group, the leadership group, in Australia is 17 years with Macquarie. So we've worked together for a long time. We know how each other work. We've got our own ideas and clients and partners and things that we're doing, but everyone does that together. So that, I think that's the key to it.
Might reflect also the partnership model that investment banks actually came from, where it was that wouldn't necessarily be applicable to other parts of the business, but certainly investment banks were previously all partnerships until they got listed, and maybe that collaboration is more applicable to that model.
Yeah, and we had a different upbringing. We started, in fact, last year was our 50th anniversary, Macquarie. So we started in 1969 here in Australia as the offshoot of a British merchant bank called Hill Samuel. Started by three people, and it wasn't a partnership. It was set up as a company to start with, but it was set up as the staff, in a similar sort of way, the staff share in the profit that's made by the company. So if there's a profit made for the owners, the shareholders, staff share some of that, and that's distributed amongst the staff as profit share. So it's in a way, it's probably what you're referring to in the sense that everyone is incentivised to be as successful and profitable as we can be. And nicely, we were profitable from that first year. When Hill Samuel gave those three folk the ability to set up the company, they gave themselves a couple of years before they'd turn a profit, and Hill Samuel were happy that they were profitable in year one, and we have been every year since, which is a nice track record, but also probably goes to that cultural element of everyone heading in the same direction.
Yeah. So some of that history that you've mentioned also saw Macquarie become pretty much a world leader in interest in terms of the interest in infrastructure assets, and Australia become a world leader in a lot of ways as a result. Can you talk us through some of Macquarie's first innovations in that area, and maybe also your involvement in them? I know you started mentioning them, what was in the UK, but can you go through a bit of that in more detail?
So infrastructure started for Macquarie in 94. So Hills Motorway here in Sydney, now the M2, was the first infrastructure asset that we had an involvement in helping finance. And so that was around making sure that there was finance available for the development of that Hills Motorway asset, which was, again, driven by the nature of the cash flows coming from that, the nature of the investment that might be required. And so the heritage of our business in the infrastructure started from that point. And the way that it has developed for Macquarie is really a series of adjacent steps. So we thought, okay, well, we can do toll roads. That's okay. So we moved into looking at other toll roads that we could help finance and develop. Airports had a similar characteristic based on passengers going through the airport as opposed to cars travelling down the road, and then regulated utilities. And so as we...
So that was the Macquarie Capital arm at first, right? It was just
it wasn't
advisory.
called that at the time,
right,
but it was called structured finance, I think, at the time. So
that function. So so you identified airports, but you weren't owning them at that point.
No, we were helping finance them.
Yeah.
So we were helping financing them. So that was really helping government or developers finance the development of those assets. Then as government started to look to privatise some of those assets, and then the next sort of classic example of that is Sydney Airport when that came up, but there was a number of different assets that we'd been involved in, both in Australia and around the world between Hills Motorway and that point. That again is also a financing activity in the sense that we had by that stage the capital that wanted to get invested in owning those, and Macquarie to facilitate that or create that opportunity. Oftentimes we would say, look, we'll do that. We'll buy it and we'll put it on our balance sheet. And then after that, because we can manage that transaction and we can make that happen, we will then bring in investors behind us and alongside us to co-own that asset with us. And then ultimately you might put that asset into one of the long-term funds. And so the Macquarie Capital part of the business's job was to create the opportunity, make the transaction happen, and then the longer-term investors would own it, whether that's a fund or some of the super funds directly and so forth. So that's been the model.
When you, just listening to you describe some of that history and Macquarie's part in it, it's striking. You talk about private finance in infrastructure, you talk about asset sales and asset recycling, talk about the disciplines that private finance brings and bring investors into stuff. Quite aside from Macquarie's activity, Australia is genuinely a leader in a lot of these spaces. And I think often we, sort of the general public's view seems to be, or certainly the media's view seems to be on a lot of infrastructure things like, oh, Northern Europe's really good at this, or Singapore's really good at this, or an example from the US that's really good at this. But Australia genuinely is a world leader.
Australia genuinely is a world leader, and I think it's come out from a number of reasons. We've had as a nation a stable, developed investment opportunity in Australia. We've always been importers of capital and a nation that has needed to develop the assets to support the growth of what we've been doing. So we've had a national need to do that. We've had a superannuation system here that has had that build-up of capital saved to then be invested. And so we've found a way and a need to have people that help that capital get invested. So the skills and expertise in investing the superannuation money. And we've had a set of governments that have recognised the partnership element of private developers, private builders, private owners, private capital coming together with government desire to have assets built and available for the community. So you put all that together, and then what you've seen that Australian expertise that's developed as a result of that then head to other markets where that has emerged. So the UK, Canada, and other places that are at the forefront of infrastructure finance.
Do you think we've effectively leveraged that expertise export opportunity for infrastructure? Do we do enough of, I mean, maybe we do it under the radar and we just don't hear enough about it, but I wonder to what extent, in things like a free trade agreement with the UK, for instance, that might well be coming after their exit from the European Union. Is this kind of thing an area where we should be saying what are the sticking points that stop Australia being a better exporter of those skills and the advisory services that you guys provide?
I think we're actually pretty good at it. When you go around the world and you talk to international investors and international firms that are involved in infrastructure investment or development and so forth, we often forget in Australia that we are good at it and we are known to be good at it. And around the world, you'll talk to those investors and you'll sit here in Australia and say, there's a bit of dysfunction happening here. The risk allocation over here is getting a bit out of whack. This government's, not developing a lot of infrastructure at the moment. And you go overseas and they're all saying, fantastic, you guys have still got it right down in Australia. You forget, actually, that the regulatory settings, the rule of law, the investment opportunity, the market, the economy here is conducive to continuing to do those things. And you've got the skills and the understanding to do it. We drive a lot of the innovation in the structures and the way that transactions come together, which is then exported offshore. So we can always do more. We can always be more helpful, and we can always be making more of it. I'm sure we can, but we are actually, I think, at the forefront of the expertise, and you see it because you've got a lot of big Aussie funds and firms offshore making those investments and driving things. IFM who are offshore making lots of investments. You've got a lot of the super funds here who are now going offshore by themselves. You see a lot of Australian people who have very senior positions in a lot of the infrastructure funds and investors and advisors based in Canada, based in London, based in
one of our
all of our firms.
One of our former colleagues actually is Jonathan Kennedy, is over in New Jersey doing pretty much that, although not for a fund, for a government agency.
For government, yeah.
And I'm absolutely appalled you've mentioned his name. We're
going to have to cut that out, actually. But the sort of anecdotal feedback is that all these Australians keep going over there and saying, why can't you just do it the way we do it? And they'll battle for 10 years and then just come back home because you can't get deals across the line. But at the same time, there's this funny situation particularly in the US where there's an example that I was just reading about the other day with the high-speed rail line that's just been built in Florida. completely privately funded, completely privately initiated, has had no subsidy, no pretty much no involvement from government. So at the same time, there's this and that's not necessarily for high-speed rail, but other infrastructure assets. It's quite possible all over the US in a way that we don't necessarily see here. So what's the issue? What's the difference? How is it that those kinds of things are possible there, and yet every time we see, for example, some private sector entities suggest a high-speed rail line here,
yeah.
I mean, maybe they're the ones that are going back to the US.
Possibly. I'd probably make the observation that high-speed rail is probably a specific asset class that has its challenges in the Australian context due to distance and due to the physical nature of our cities.
Absolutely.
And high-speed rail works when you get them in close to the centre of cities, and we've got problems with harbours and hills and all those sorts of things that add costs. So I wouldn't.
I'll stop being a civil engineer.
I wouldn't. I wouldn't ping it on
course.
high-speed rail, but. I do think that there's probably a couple of elements to that. One is our state governments in particular here, supported by the federal government from time to time in various regimes, have proactively sought the engagement of the private sector in helping develop infrastructure, and that's grown in the sorts of types of projects that they've been able to do over time. Other jurisdictions in the states you mentioned, really that state-based system hasn't caught up to that at all. So you get these conversations and you say, well, we'd like to help you develop a new road over here or a new bridge. There's a lack of understanding as to how the private finance model works, whether it's completely privately financed or a partnership type approach with government providing some of the elements of the projects. And a lot of those people who are overseas, Jonathan included, will be educating and explaining, and you've got people like Joe Hockey, former ambassador to the US, who spent a lot of time doing that.
Absolutely.
And it'll just be a matter of time, I think, before projects unlock this weight of capital that is looking to meet the community's needs and expectations around the development or the upgrade of infrastructure. Those two things will meet for sure.
I think the thing we forget about the US,
it's 50 countries.
two or three US states, and you've got a whole Australia. You actually don't need Australia to act. The US to act federally for there to be a massive market for infrastructure development. There are a few states, particularly driven by governors, that are at scale.
There is, and so you see a lot of Australian expertise over there in utilities, in transport, in aeronautical side of things, in airports, in construction. Transurban are big in the US and looking to do more. Lend-Lease are big in the US and looking to do more. And they do things like defence housing, and they do developments, not like they do in the UK. And here, big integrated civil type developments, they do a lot of military type work. Now, that's just the nature of the work they're doing for the federal government in the US. But I think that'll expand out. We're starting to see it in airports with some of the port authorities. We're starting to see it in toll roads or road expansions, in particular things like hot lanes in some of the motorway networks. And
so is there anything that they're doing overseas in some of these other jurisdictions where you've looked at, and I mean particularly in terms of the either the way government procures or the way government is open to private sector-led infrastructure proposals? Is there anything that you've seen overseas that would be good to adopt here?
So there's lots of knowledge transfer back and forth, both to Australia and from Australia as you go overseas, and people who develop things in different markets, bringing those here and going the other way. So we like to do that, and we're an internationally connected organisation, and part of our job is to do that. Some of the things that we've been seeing overseas, perhaps that are here or are coming here, are where you have seen governments want to create a particular outcome by, say, setting up a partnership or a PPP. There's a concession model that they're setting up to provide that private opportunity to get involved. Some of those have been by way of subsidy schemes. So you think about renewable energy, for example, and you've seen schemes set up in jurisdictions to encourage investment in renewable generation, where that scheme has been a model that's been adopted around the world. We've seen that come into Australia. In renewable energy in particular, we've seen that stop in a lot of jurisdictions now, because actually a lot of those subsidies or credit schemes aren't required because the cost of renewable generation has come down and involvement from technological development has driven that down, so the dynamic changes again. But we do see that flowing around the world, both to and from Australia. I'd say Australia's probably a net exporter of structures and ideas and private capital ideas and ways to do things, as opposed to an importer. We tend to be quite thoughtful in that regard.
one of the examples, I guess, and it's a pretty big change of how the private sector has involved itself in Australia's infrastructure is your headquarters. I don't know, is it headquarters at Martin Place, or is it just...
It will be.
It will be the headquarters?
Well, it is our headquarters currently, 50 Martin Place, the existing building. Yeah.
Is that the new model? Is that where, you know, the private sector just proposes it unsolicited and leads it and delivers the whole thing?
So explain what the model is first, because not everybody will be familiar with what
sure.
you've done.
So the question you're talking about, the site you're talking about is Martin Place in Sydney, which is a station site in Sydney. Our office at 50 Martin Place, which is our headquarters building, sits adjacent to Martin Place, the street, and also Martin Place Station.
Mm-hmm.
So as part of the City and Southwest metro development, there's a new Martin Place station for the new metro railway that will be integrated with the existing Eastern Suburbs Railway there at Martin Place. To build that station, the government needed to acquire buildings above the station site, knock them down, then redevelop the station, and then the plan the government had was to auction off the air rights to those sites once they'd built the station for developers to rebuild commercial buildings above them. So that was the plan as the project was developing. Macquarie put in a proposal to say, well, we will, on behalf of the government, will build the station. In fact, we'll build the station and the commercial precinct around it, the retail precinct, the public plaza, and the commercial buildings above it on an integrated fashion, because the government was going to build them piecemeal and then auction the air rights off. So we offered to buy the air rights to it up front, to build the station for the government, to build that plaza, and then ultimately to build the towers there. And yes, that was done under the market-led proposal regime, or the unsolicited proposal regime, as it's called in New South Wales, where the private sector can come up with an idea. It's not a government tender. The government hasn't announced a tender, and it's there's a competitive process. You can go to government and say, we've got this idea, we'd like to do it for you. Government can say, oh, that's a good idea. I like that. How would it work? And then you can go through the stages of that proposal process as it goes. So that's how it's come about. Talk a bit more about it in a minute. I think it's a fantastic project, most exciting project I've worked on in my time at Macquarie in my career. But as a philosophy of private people, the community coming and saying, here, we've got an idea, we think this will be good, we can help you develop it. We think that's fantastic, and we encourage that certainly across the states in Australia and other jurisdictions as well, being able to say, we'd like to help, we'd like to come with an idea. We need government to be a partner in this, because the government might be connecting to a transport hub, it might be on government land, it might be something connecting to government at the other end, and the government at the end of the day needs to approve it under whatever.
So are you helping?
I'm going to play devil's advocate first, just for fun.
Yeah.
So in that circumstance, and let's not talk about Martin Place, because I think it is quite unique. How does government satisfy itself that it's getting value for money?
Yep.
If someone's coming to them with a partially made proposition already, there may be a uniqueness element, because there may be a real asset that entity has, or a right to occupy or whatever. But beyond that, how does government satisfy itself that this is a value for money taxpayer proposition without the impact of competition to deliver it?
Yeah, that's right. So part of the answer is the uniqueness element to it. So part of the market-led proposal regime, or the unsolicited proposal regime, is a requirement for that proposal to have a unique element. That means that others couldn't actually develop that proposal. That is a pretty high threshold to get over, and it comes through ownership of a particular technology or a license, or a unique idea, or a unique physical attribute that no one else is able to.
And in this case, it was
replicate.
ownership of the land.
It was
and the building.
Ownership of the land and the building on which our headquarters stands, and also the ability to integrate and provide a different solution to integrate the site through the north underneath that building,
right,
to the south. So you have one connected precinct. So the unique nature of a tunnel effectively underneath our existing building there, which we're able to offer.
Hey, you'll be able to use your PhD on that to test the movements in the building.
So here's the weird thing. Here's where it all connects back together for me. So my PhD was in predicting damage to historic buildings due to building rail tunnels underneath them. And what we are doing in Martin Place is building a rail tunnel under an existing historic building.
Wow.
So it is exactly what I did my PhD in, which was a little weird. And not everyone at work knew this. In fact, there's a good story about we're in our former CEO's office explaining various elements of the transaction, and as all good CEOs do, they ask questions and they keep asking the questions until they exhaust how far down the knowledge base that you've actually got. And there's always a natural suspicion of asking technical questions of the investment team, because usually you'll have the engineers or someone else answering those questions. And I was getting this line of questioning about, so what happens to the building when you dig the tunnels, and will it move, and how much will it move, and will things crack? And I was answering all these questions, and I could see Nicholas Moore, our former CEO, getting very suspicious as to why does John know the answer, or why is he pretending to know the answer to all these questions? And at some point, one of my colleagues said, John's got a PhD in this particular thing. Nicholas,
was it secretly you that had sent around the paper anonymously and said, look, John has this.
I know all these things. Now, I don't pretend to have done any of the work on that on our project. We've got we've got partners and consultants who are doing all of that. But again, it's interesting. The understanding of the physical nature of what you're building really does help you design the concept and finance it and convince people it's a good idea and all of those things. So it does actually come home there. But back to your question, I think the answer to your question is, how does government determine value for money? And the answer there is in the normal way they do in a competitive process as well. So the fundamentals of a competitive process are that you've got competing bidders one of whom will give the best price, and that best price is then compared to a government benchmark called various things, but to meet the value for money threshold, whether it's a public sector comparator or some other name, there is a test as to whether government could procure this in a more efficient way than the private sector. And so any project needs to meet that. In an unsolicited proposal, you're only comparing one thing to that benchmark, but that's the same process. And the other element to all of that is this is generally something in an unsolicited sense that government hasn't thought that it could procure or would build or design now. Maybe it was in their plan in the future, or it's different, or it's enhanced, or there's some additional benefit that the community will get out of proceeding. Some of those things you can put a value on, some of those you can't. So does it pass the test that actually this is a good community thing to do? The government needs to be satisfied of that as well. And there's been the vast majority of proposals that have come to governments of all natures in an unsolicited fashion haven't gone ahead because they haven't passed any of those tests. It's actually only a handful that have proceeded. But we think it should be encouraged. We think the community, private sector coming with ideas, helping government deliver on its outcomes and aims is a good thing. Government's got the right to choose to approve them or not. But,
so is that something that's occupying much of your time, that kind of project origination from within Macquarie, or do other stakeholders come to you to help with that?
Both those things happen. We spend a lot of time thinking about how do we create and generate investment opportunities? How do we create and generate assets? And we'll respond to processes that are out in the market. Of course, we'll help bid, we'll advise, we'll participate in those. But if we see opportunities out there that we think is a good idea to go and develop that or propose a development, we'll go ahead and propose it.
We've spoken a fair bit about that kind of private sector led, I guess, mostly projects, but I guess larger than projects as well. One interesting thing that we discuss quite a bit on this show and is happening a bit more is private sector led or influenced policy development. Now that sometimes has bad connotations to it if it's a bunch of lobbyists protecting self-interest, but I mean something more along the lines of what we heard recently from BlackRock, which was the world's biggest asset manager, announcing that they're getting out of fossil fuels. I think they've signed up to, I can't remember what it's called, but some kind of action committee or group or something like that. Do you see much of a role for, particularly actually in the finance sector, do you see much of a role for investors and fund managers to take that kind of I don't want to say moral stance, but something outside of just profit. Do you see much of a role for that?
So we see more and more of that occurring.
Well, Shamara's been pretty active.
Yeah, so those two things are probably slightly different. So we're busy doing all sorts of things from a Macquarie point of view. We're getting on and doing things that we think make sense when we're trying to find opportunities to bring all of that saved capital together with what the community wants and the needs, and we see our job as sitting in the middle and facilitating that, and the things that the community needs and the things that we need to invest in terms of developing infrastructure, developing social services, developing renewable energy and so forth are the things that we're operating in. I'll talk a bit more about that as you go. But your question around, are we seeing more activist even investors requiring of the companies that they invest in to behave in a certain way? We are starting to see more and more of that. And so when you think of that environmental, social, governance type of lens that investors are applying to the investments that they make, that is becoming more and more a part of their decision-making process. So we've seen it in things like tobacco back in the day. So, weapons, tobacco. Now we're starting to see it come into carbon intensity or climate or environmental or all of these other elements of a filter that investors will apply before they're investing in something.
It's very interesting.
Maybe the difference you're talking about is when they're already invested in something. So BlackRock's a good example.
Yeah.
We invest in this company. We're now going to be talking about and really trying to steer that company to do or not to do things by allocating our capital in a certain way. And yes, we're starting to see more of that.
It's interesting that you mentioned tobacco because my next question was, do you think it makes a difference? Because if you look at tobacco, absolutely, lots of investors are saying that they won't be involved in that kind of sector anymore. And yet the major tobacco companies are I think I've seen that they're the most profitable that they've ever been. And I guess I wonder, in the context of what we're describing now, do you think it makes a difference if when BlackRock says they're moving out of fossil fuels, or is BlackRock moving out and some other investor just replaces them?
Yeah, look, I think the answer to that is that if there is a community or a market or a social desire for something, that'll be provided in some way, shape or form. And if it's being provided or manufactured or the service is being provided, there'll be investors there of some description to invest in that and provide that services if there's an appropriate return for it. So whatever that is, that product or that service, there'll ultimately be, if there's a market for it, there'll be someone to invest in it. So the answer to your question in short is yes, there may well be others. But I think that the lens of a broader societal change or a broader community groundswell around some of these issues around the environment, around energy, around carbon and around climate is probably broader than just one particular product or service that you see, because it goes to so many different parts of the economy and the way that we conduct business and the way that things are generated, manufactured and services are provided. So there's a bit of a broader element, I think, to it than just some of the specific examples. Is it a good thing that investors have a role to play in talking about where their capital is allocated? Yes, because that's what drives markets and that's what drives investment decisions, and capital should be allocated to the most efficient place where people are getting a return.
Certainly, someone the size of BlackRock should, if they're pulling out,
well, they're large,
that's got to
have an influence. That's right. I just think it's the additional investment filters or decision hurdles or reasons that you might invest on top of a purely financial return that people are now more conscious of, actively using. That's probably the difference.
So maybe it's something that'll come later, but if we just for the purposes of this question, let's stick to fossil fuel industries. Do you think that fund managers like Macquarie or like the even bigger ones like BlackRock, do you think they'll see a difference in their cost of capital and actually have to change behaviour as a result of these decisions? The companies that that are taking the investment, I mean.
Yeah, well, I guess it's the decision of the investors to allocate their capital where they see fit. They may choose to not allocate that capital into different areas based on the filters you describe. Does that have an impact on the cost of capital for the company?
Yeah.
In terms of investors' decisions about where it goes, it will for sure. So I think if capital is scarce, tends to be more expensive. So that'll just be an implication in the ordinary course for scarcity of capital going into different things. So if you want to develop a coal-fired power station today, as opposed to develop a coal-fired power station 20 years ago,
it's
all
harder.
other things being equal, capital might cost you more today because people are withdrawing from that sector.
But there's other things driving that cost of capital.
Lots of other
the
things,
view of risk on it inherent in
all
a
of those
particular
things.
carbon
So,
intensive thing,
answering
might
the
be
specific
marginal.
question around sort of just narrowing it down to that, from a finance theory point of view, that's where you get to. But you are right. There's all these other elements around actually the risk of, the risk of the regulatory environment, the risk of what government policy might be, the risk of what the community wants, and am I investing in an asset that in 20 years' time no one wants that service?
And there's a technology risk as well,
Technology
which is
risk,
a great segue to another route of questioning, which is to extend that example. Well, there is a technology risk associated with a carbon intensive energy generation platform, because someone might well invent a firmed renewable type approach that is just cheaper to deliver the energy.
Or we might get a
with.
carbon price at some stage.
Or we might get a carbon price.
Yeah.
But to extend the question about technology and maybe looking forward to the future a bit, in my interactions with your colleagues, I hear a lot, and across the sector, I hear a lot more about technology in the last 18 months, 2 years than I did before, both as an investable asset class, but also from a disruption perspective. So one thinks about pieces of infrastructure that are traditionally seen as something with natural monopoly characteristics that maybe now are more vulnerable to a disruption and version of the future. I wonder if you could reflect for a moment on those kind of areas around technology.
No, we're definitely seeing technology, data, the digital nature of the provision of services, including infrastructure and transport and so on, is a big thematic. We see lots of opportunities in that thematic, actually, in terms of the way that we're going to be able to develop assets, new technologies coming in to replace old technologies. A lot of those are cheaper and more efficient. So one of the big technology trends you're referring to in energy is just the simple fact that the cheapest form of energy to deliver now tends to be a renewable form of energy. So you're going to produce cheaper electrons by building a wind farm in certain areas, and off you go. And so that's the thing that's developed because it's the cheapest and most efficient. So the technology change driving that, rather than policy or anything else around it, is evident in a lot of the areas that you talk about. The other thing too, there where we're seeing a lot of technology investment, a lot of opportunities is in existing assets, so existing utilities, existing airports, existing roads, and the technology enhancements around things like making things more efficient, monitoring the status and the maintenance status of assets so that you can more efficiently maintain those at a lower cost, that you can enhance the capacity of assets, whether they're a generator or a road. Classic example is if cars drive closer together on a fixed set of road space, you can get more vehicles down the road. So if the cars are talking to each other and they can safely travel at a closer distance. So all of these efficiencies coming through that technology.
Is that being that's a very good example. Is that do you feel like that's being factored in? Let's just take the platooning or just them being autonomous and driving closer together. Is that being factored into current project development sufficiently? As in, are we building too much, or are investors taking account of that kind of risk?
They are, yeah. I think people are conscious of the technology coming, the technology that's available, the faster pace at which technology is becoming available. So if you look at all the predictions of where renewable energy costs are a good one, but electric vehicles will be another one. I'm sure there'll be a similar set of charts that say, well, here 10 years ago is our prediction of where the price will be, and then 8 years ago it's here, and I'm, for those on the phone, I'm making gestures with my hands, and the prices are coming down, and we've always got it wrong around the cost of that curve, and the technology curves come down faster than we've always predicted. So I think people are, but I still think we'll always be surprised at the faster pace of technology development. But people are thinking about it, people are factoring it in. People with existing assets are now using the technology that's available that they wouldn't have thought of in the investment time frame when they invested in that utility. Now they're able to go and do different things than they thought about. So that's definitely happening.
The other area of the future I wanted to talk about is just the future of private finance in infrastructure. We've spoken about Australia being at the kind of frontier of that, and we've spoken about some things happening overseas and vice versa that we should be importing and exporting. Big question, where's the future? What's the next range of innovations? Where's the next focus of private finance in infrastructure?
So the thematics we're seeing, the one that everyone knows about is the continued weight of capital that's sitting there unspent looking for opportunities. So that's been a thematic for a number of years now. That continues as the savings through our superannuation funds and other pension fund schemes around the world continues to grow. Infrastructure fund managers who are raising capital but haven't spent it, that dry powder, up over 200 billion around the world now as at last count. So there's a lot of pressure on that capital to get deployed. So what does that mean? Again, it means that capital is looking at more and more unusual opportunities. The classic opportunities for that capital has been government long-term leases or privatisations. Certainly in Australia, there's not a lot of those opportunities left. So people are looking at there's a couple of trends. One is the transactions that they're getting involved in are bigger and people are wanting to put more dollars out the door in each transaction. So that's a thematic. And so the targets or the investment opportunities that we're seeing people look at are getting bigger and bigger.
Is that a good thing?
It's a good thing in the sense that, there's this sort of expanding universe of things that people will look at. It's a bad thing in the sense that the limited number of opportunities in that space mean that it's harder for that capital to get away. One of the trends that we see, therefore, because of that, is a thematic we think we'll see a bit more of this partnership of the investors with some of the big industrial companies. So this is where you've, say, got a set of investors. Transurban have done this pretty well, actually, here in WestConnex and in Queensland Motorways. So you've got the industrial company being Transurban, the expert asset operator and developer. They're bringing that private capital alongside them, your AusSupers, your Ardias, CPP, IB, in that case. And they work as development partners. So as those assets continue to need capital or CapEx as they grow and expand, they've got the opportunity to continue to invest alongside that partner. So we've seen it in other examples, in power development, in pipelines, in renewables. And so where you see a lot of these assets that are in industrial companies that have infrastructure-like characteristics, long-term cash flows, long-term contracts, those companies bringing that private capital in alongside them, they're still the experts at providing the service or doing the transport or hauling the coal or whatever it might be, but having some of that private capital come in. So more corporate and commercial and industrial focus as opposed to government focus. That'll be one of the thematics I think we'll see throughout this year.
Similar kind of crystal ball gazing question. I guess interest rates are the lowest they've ever been. We keep being told that infrastructure investment is definitely one of the best ways for governments to stimulate the economy, because the economy has slowed in the last couple of years, and yet governments are still pursuing surpluses all around Australia, all the state governments and federal. What do you think is the merit of that, and what impact do you think that'll have over the next few years while those surpluses are being pursued?
So I think the fundamental question there is a lever for government on the fiscal side as opposed to the monetary side needed to continue to grow the economy. The levers left in on the monetary side for reserve banks, not just here but all around the world, in terms of those low interest rates, they're either out or they're pretty close to out. So in terms of stimulating the economy, there's not a lot left there, not a lot of levers to pull. So
just QE left after that, and it's we're still unclear what the impacts of that
exactly. So from a budgetary side or a fiscal side, should governments, if they want to be stimulating the economy, be looking to make those productive investments? Yes, they should. That's a good idea, and that certainly has been the call from the Reserve Bank Governor here and others as well around the place to stimulate economies. Making those investments is one channel, one lever that you can pull for that. And that's capital going into new projects and making those investments, and that needs funding. That doesn't have to be government funded. It can be private capital. It can be government capital, and a combination of both. You need the government to set up the framework and all the things that we know about there, but the stimulatory effect of the dollar going in, it doesn't matter if it's a private dollar or a government dollar. So that's one observation. The other observation is that it's not just those investments, but productive policy around ongoing productivity improvements and efficiencies and industrial processes and manufacturing and training, and people encouraged to spend money on research and development. Yeah, all of those things as well, I think, are part of the levers government have got to pull around encouraging growth in the economy. So all the things that they're trying to encourage, it's not just, do I spend money on more infrastructure? Yeah. Actually, this whole wide range of things is quite important, I think.
I'm going to just roll out my soapbox because it's an area I've been quite vocal on, is that if a stimulus is required or decided by governments, it's got to look at the lower end of scale of projects, because what we don't want to be doing is trying to accelerate multi-billion-dollar projects.
Big projects, that's right.
Road maintenance. That's a classic one.
That's actually related to something that I was going to ask before, which is, if these deals that because that's what you were predicting, that there's a seems to be more of an appetite for these giant deals. Does that mean we're overlooking some of the smaller but potentially much more economically beneficial projects?
So there's a lot of that happening though as well. I think that's masked by the fact that we have like mega projects that appear to dominate the pipeline, but actually in the work that we do at Infrastructure Partnerships Australia with tracking the pipeline through ANZIP, which is infrastructurepipeline.org.
Good plug. You beat me to it.
There is actually it's a fairly normal distribution of the types of.
It is,
projects.
and I think, and not to be misunderstood around the larger scale, and like the big funds who are getting bigger want to put bigger licks of capital out, and so that's certainly a trend, and so they're going to do those bigger projects, but that's not at the exclusion of the opportunities to invest at the smaller scale, and there's lots of different opportunities at that smaller scale when you talk about things like maintenance or efficiencies or putting solar panels on roofs. You've got plenty of investors at that smaller space as well. So there's no problem with that capital across the board.
And some of those things are scalable as well. Like if you think about
if you program them up.
So road maintenance, Victorian's done the suburban roads packages through a PPP that are it's about maintaining existing roads and some greenfield development and renewal as well, but nevertheless in large geographic areas that make it at scale. So just to get my soapbox out, I think that if it's needed, that's where governments need to focus their attention on the use of private capital, is to get it involved in being able to quickly deploy smaller scale things in every community, rather than trying to accelerate a major metro by 6 months.
So is that something is that something that's coming out of the Macquarie Capital origination team of packaging up those smaller projects?
We're coming up with lots of ideas all over the place. We'll put that one on the list. But I think the idea of what you're talking about there, Adrian, around that the smaller scale portfolio type effect, I think there's an opportunity for government around that, because actually the job of government there is to provide the right framework and program around it. If someone says, well, there's a lot of effort that goes into documenting or structuring these sorts of projects, even just from the government side. If you're doing it for one small project, actually if you do it for a big portfolio of little projects, you can do that work once, have the investment going over those over a period of time, over a program. Fantastic. There's an efficiency in and of itself. So that's to be encouraged, I would think. And each of those things could be quite small. It could be units of 10 social houses. Yeah. But then there's a program of building hundreds of those over the course of a multi-year program around the city. It's maintenance of council and sub-arterial roads in a particular area that expands. So there's lots of ways to think about
school renewal.
Schools, exactly. So.
I want to ask a slightly different question. There's a period we went through and have since emerged from where the leader of New South Wales, Australia and New Zealand were all at the same time former investment bankers. What do you guys know that we don't? And is that the next step after Macquarie?
Yeah, when's your run?
Are you heading
For our whole organisation, or are you talking about me?
Just for
Me.
you?
Oh,
Are you
right.
heading across the road to 52 MP after that?
No, not for me. Not for me. I'm quite happy where I am for the moment. So no, lots of things we can do. I can do at Macquarie. So that's the focus for me. But I don't know. I don't know in the answer. I don't know how it turned out that all of those people who'd operated in the finance sector ended up in politics at the same time, leading those organisations. I think one of the things that you'd observe around the work that we do certainly is a lot of it is project based, and a lot of it is trying to make things happen or facilitating others who want something to happen. We're helping them do that. So there's a nature of delivering projects that possibly flows out into the community or service or politics, because people like getting things done. So maybe that's the connection. I don't know.
Look, it genuinely is an interesting development. That was probably coincidence at the time, but certainly the depth of your understanding in infrastructure in general, I don't think, and your colleagues as well in investment banking, I don't think is necessarily replicated through for other executives who might have come up through a marketing channel or might have come up through a different kind of area. And maybe that's it. I don't know.
The reflection I'm making, particularly in New South Wales, and probably New Zealand as well, it made a very dramatic difference to the way government operates.
Absolutely.
Like having an investment banker driving that in New South Wales did genuinely drive the balance sheet renewal that occurred in New South Wales, the recycling of assets in New Zealand with a comprehensive balance sheet approach that was deployed, the way government operated, it's seemingly having that kind of framing of the way an investment banker thinks about the world appears to have had a pretty dramatic impact on those governments and economies.
Yeah, I don't know. I mean, maybe it's the project-based nature of things. Maybe it's the financial need of what the government needed at the time, whether it's balance sheet repair or capital to be deployed. So maybe those skills are relevant at that particular point in time in the cycle. Hard to know. It could be an accident, just an accident of history that you end up with people with a finance background in those roles. So
I'm going to ask a slightly roundabout question. The huge amount of money that is ready to be deployed into infrastructure. And in viewed many ways, infrastructure is actually pretty a nascent investment class.
Yeah.
So
still categorised as emerging or alternative in many investors' minds.
And a lot of the superannuation funds say we're underweight on infrastructure. They want more.
Yep.
Where does that money go if it doesn't go to infrastructure, and what do we, the infrastructure sector, need to do to make sure it doesn't go to those other uses?
If it's their pot of capital for stable long-term cash flows, it typically goes into loans or bonds or something of a long-term type nature.
Sorry, you view those as interchangeable in terms of the risk profile for a fund?
No, they're different, but in the absence of the ability to invest in infrastructure, then it's unlikely to go into a volatile, high-risk investment. So if it's not there, it's going to sit in cash until it gets deployed. And a lot of it is sitting in cash, or commitments are sitting in cash, those who'd like to get deployed into the infrastructure space. It'll go into real estate. That's another asset class long-term. So there's places that it'll go if it really wants to get into infrastructure. We're starting to see more and more people who are long-term debt investors or lenders saying, actually, equity in an infrastructure asset, long-term contracted cash flows, I'm getting a superior return. There's more risk that I'm taking for that because I'm not a secured lender, I'm equity, but in a low return environment, we're starting to see a little bit of flow that way, actually, as opposed to, so that again is increasing demand. What do we do to increase the opportunity set from an infrastructure point of view? Well, that's the challenge, isn't it? So we see that as part of our job in terms of trying to create assets and create opportunities for that capital to invest.
And that's what you pay Adrian for as well.
So it's worth we haven't. So one of your other jobs is that you're on my board. You're deputy chair of Infrastructure Partnerships Australia. So you're my boss.
In a way, yes. You've been behaving very well.
Well, do we want to do my review now? So I mean, I guess it's a leading question to the kinds of things that you and other members of IPA tries to drive through your membership of IPA. It's actually getting policymakers to stay focused on those longer term reform opportunities.
It is, and I think so. That is part of the answer to your question around making sure that we've got projects happening, assets being created, investment opportunities happening. Part of the answer to your question is where there is a community need or a community demand or an efficiency to come, that's the job of the participants in industry and as represented by an industry body in IPA to look to help to facilitate the policy, the frameworks, the decisions that'll mean that those projects happen. So all of that adds up to the work that IPA does, and as members of IPA, as Macquarie as a member and a founding partner, I guess, of IPA, and we've been members since the start of the journey. That's what we look for from IPA as an industry spokes body, policy developer, facilitator of discussions. And the nice thing about IPA, I think, is that you've got this great combination of private participants, builders, investors, service providers, government, not politicians just, but the bureaucracies, the treasuries and so forth. And you've got this melting pot and discussion mix and ability for all those people to come together and talk sensibly about things. If you're going to be able to talk sensibly about things, you can progress the agenda, you can progress ideas. And I think that's the great power of IPA relative to other industry bodies that only tend to represent one of those different groups of stakeholders. So
I look for podcast hosting opportunities from our membership with IPA.
Just worked out well.
Each to their own, you know.
It's a diverse group of members to choose from. That's right.
That's good. One of the things we didn't discuss under your co-head position, Macquarie Capital, is there's a number of different business lines. So this is going to be a difficult question for you because there are some people that will be offended by your answer to this question, which is what's your favourite type of infrastructure and why?
See, that's easy. See, tunnels.
Okay. Yeah.
Yes, I might.
In all their forms, like sewage, tunnels.
Yep. Underground tunnelling. That's it. That's my favourite form of infrastructure. Maybe it's because I know more about it than the other bits. But I like the complexity of it, the challenge of building underground. You think back to the heritage of the early tunnellers who were trying to tunnel in London. You think of your Brunel back in the day who invented the tunnelling shield. So a shield to stop the mud falling into the guys who are actually digging by hand the first tunnels under the.
But so it's tunnels under construction then?
Tunnels under construction, but the beauty of a tunnel that has been constructed.
You like an operating tunnel as well?
I do like an operating tunnel. I do like to go visiting tunnels that are under construction though. There's a slight favourite to the construction side of things. Okay. So that's right.
Yeah. That's a good note to finish on. So thank you very much, John.
Thanks for having me. Thanks to you both.
Thanks for coming.
Pleasure.
Well, that's it for today. Thanks as always to PwC Australia for their continued sponsorship of Inside Infrastructure. Please make sure you subscribe on your favourite podcast platform and leave us a rating or a comment on LinkedIn. If you have any suggestions for guests, then please feel free to send those to either Ilya or myself. We've certainly appreciated the messages we've been receiving so far. This episode was recorded and edited by Adam Stevens from TAG, PwC Australia's internal media agency. Research was conducted by Linda Bierschen, Brendan Pearce and Michael Player.